Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. The market's up and about 84 points on the Nifty. 11,251 is where we stand at this point in time. And basically, this is, I think, the day's high that we are looking at. Just quickly confirm that 11,185 is the high. We need to look at the high today, so just give me a minute. So, yeah, we're almost, 2 or 3 points away. But pushing higher, 11,251, and we're about 6 points away from the day's high. So this is not bad. This gets us to the Zensar acquisition, which happened, and the announcement came about 2 hours or so back. Zensar has made another acquisition, close on the heels of the first one, which was about 2 months back. We've got Harshvardhan Goenka, who's chairman of the RPG Group, now joining in to talk to us a little bit about the Zensar acquisition. Mr. Goenka, thank you very much for joining us. First up, could you tell us how much is Zensar paying for this acquisition, and also talk to us a little bit about the company?
We're extremely excited about the acquisition of Indigo Slate, which is a digital marketing company based out of Seattle in the US. As you may be knowing, we are one of the leading players in the digital space within the country, and nearly about 40% of Zensar's turnover comes from its digital play, which is very high compared to most of its other colleagues in the industry. And we acquired a company called Foolproof around a year and a half back, based out of UK, which gave us an entry into Europe. And we've been seeking a company in the digital play in the US. So there is a large complementary strengths that we together have between Zensar and Indigo Slate. They do the entire suite of digital marketing services, whether it is web content, mobile content, doing videos, doing consultancy services. And they do a 360-degree play as far as digital marketing for customers. We're extremely delighted with the range of customers that they have. They have some of the very large Fortune 500 companies, or rather even the Fortune 100 companies who are there as their clients. The turnover last year for Indigo Slate was about $22 million. And the EBITDA is in line with the Zensar's EBITDA, which is around 15%. The deal construct is that we are paying them $18 million upfront, and there will be some amount which will be paid in future based on the performance grid over the next 3 years or so.
Mr. Goenka, so $18 million upfront you will pay for this company, but what will be the total?
It will depend on performance of the organization.
Beyond $18 million right now, any future payout is not guaranteed.
No, the fixed amount is $18 million. The rest is based on a performance grid. It all depends on the performance, how they perform over the next 3 years. We'd be very happy if they perform well, and we are very confident that they will, and they will get large earnouts if that happens.
Okay. So in terms of profits, you said $22 million in revenues, but does it make a profit? You did indicate that it has a healthy margin.
Yes, it is. The profit is, the EBITDA is around 15% or so, which is very much in line with the EBITDA of Zensar. And we are hopeful that with the synergies, we'll be able to drive much better profitability with the company.
I mean, the amount is small. It's about 120 crores upfront. How would you be funding this, Mr. Goenka?
So it would be a mix of debt and internal resources, and it's a small amount, so it's not a problem.
Mm-hmm. You know, there are studies which show, Mr. Goenka, that about 3/4 of every dollar, so about 75 cents of every dollar which is spent on digital advertising, I mean, goes straight to Google and Facebook. Is this a sort of challenge for you, or it works for you in light of this acquisition?
So it's not a concern. To me, it's an opportunity. Is how we can service customers like Google or Facebook in the future. So I see it as an opportunity because to us, it doesn't matter who grows and who doesn't grow. For us, what matters is can we bring in strengths and some good, interesting, useful services to clients like the ones that you have mentioned.
Okay, Mr. Goenka, thank you very much. Appreciate you joining in with some perspective on the acquisition. So that is the second acquisition which has happened this year from the RPG stable, and of course the company in question is Zensar. Ashwini is with us. Ashwini, sorry about coming to you a little late, but thanks for joining in as always. 80 points on the Nifty, Ashwini. Your sense of things?
See, the market continues to show traction, particularly on the financials. And my sense is you got a bit of a dip, 1 to 130, that is getting bought into. So chances are Nifty as well as Bank Nifty could close near the highs of the day. As we've been trading, the Nifty futures premium is expanding now about 25, 26 points. That just shows there's a great amount of addition of long positions. So that way, I think going into big results in the afternoon, the market should close strong. And basically, you have rotational leadership. Either you have those erstwhile all-time high stocks putting up their hand, or now even the underperformers of corporate lenders and metals, etc. Everything is now participating. So we are not really dependent on a certain group of stocks. That in general provides strength to the market. Having said that, ICICI Bank is a buy with a stop of 286, target of 302. What has started yesterday, chances are will continue post the results. Axis Bank is a buy with a stop of 545, target of 570. And State Bank, which was higher, 3.5%, is now up only less than 0.5%. So this dip on State Bank should be bought. This is a buy with a stop of 285, target of 300.
Let's get talking about some earnings then. Tirunelveli Chemicals posted a weak set of numbers. Revenue and EBITDA have both come in lower for the company, even as the cost of materials and finance costs seems to have declined this quarter. R. Parthasarathy, the MD of Tirunelveli Chemicals, now joins in with the finer details. Good afternoon, sir. Thanks very much for joining in. The weakness that we've seen in Q1, is it primarily because of the plant shutdowns that you had? I think Ranipet, Malaysia, both saw shutdowns for a bit. Is it purely on account of that? And by when do you think we might see improved volume growth?
It was only because of the 1 month shutdown in each location. It was planned. It was originally going to be last year, but then we deferred it because we had pending orders in the books and we had to satisfy them, contracts. It's actually margins were better during the first quarter. We did lose the volumes, and it was only because of that in both the locations. Things have stabilized now, and we expect that they will be normal now. However, you have to realize business, margins go up and down in our industry. It's a volatile industry. But generally, for the last couple of years, things have been okay. Volatility has come down significantly.
All right, sir, may I request you to just remain on the line for just a little bit. Shoppers Stop, the stock is spiking up as we speak. The top line is a tad lower, actually, just about 10-12%. But I think the profit figure looks good. In fact, it's a profit compared to a loss. And look at that vertical climb now, about 5% higher. We'll have Mangalam joining us in a bit to take us through those numbers. But for now, looking good, no doubt. Mr. Parthasarathy, let me come back to you, sir. In terms of price and volume, could you give us a sense of the breakup for this quarter?
It's going to be stable. It's going to go back to about what it was in the previous quarters before this Q1, and volumes and price are very stable. But I must say that revenue changes, volume is stable, revenue changes, but then that changes along with raw material costs, which changes along with the crude oil prices. But you must remember that we are not that concerned with prices. Our aim is the gross margin, and we try to defend our gross margins very aggressively. So we maintain gross margins, and product prices also go up in tandem along with raw material costs. So as long as the gross margins are okay, our costs are normally under control, our net margins are also good enough.
Mr. Parthasarathy, you know, the user industries for what you make, the momentum there seems to, for the user industry seems to be pretty good. Paints, for example, as a sector. So what is going to be the biggest variable for you? I mean, if one wants to look ahead, what would be the biggest single variable or determinant for growth?
At the moment, I see for the next 1 year internally, you must remember we are running flat out. So are our competitors in India, and most of our competitors across Asia. There is very little surplus volumes except in the Far East and Korea. And that depends on what happens in China, because they are dependent on the Chinese market. But I think China has also restarted consumption. So we don't really see any volatility this year per se. Next year, our new capacities will come on stream start coming on stream at Dahej. The results of revamp in our existing facilities in South India. So we should start adding volumes by next financial year from the first quarter. And that should be starting at a 20%, 25% increase in volume, 20% increase in volumes, and eventually go to about, within 1 year, 1.5 years, go to about a 60% increase in volumes.
That is financially 20, right? Basically. Next.
So basically 20, yeah, that's right, 20. That's right. So it will all, most of our expansions in Gujarat, the revamp in South India, will take effect in 2020 from the first quarter. In Malaysia, we already have completed the expansion. We sort of started seeing the results in the last quarter, in the previous quarter. But now it stabilizes, and we'll have about a 30% increase in volume overall from past years.
All right, Mr. Parthasarathy, for the moment, we'll leave it at that. Thanks very much for joining in. So that's the word coming in from the management of Thirumalai Chemicals. Expect a ramp up in volumes from Q1 of FY20. The capex that they have underway would be operational by then and would be helping the volume. Numbers hitting us as we speak. The first is Alembic Pharma. Over there, we actually didn't have a poll. We had estimates. So revenue is up about 33%, which is better than the antique estimates that we had. It was expected that the numbers would bounce back this quarter, given the low base of the previous quarter. For Westlife Development as well, it is looking good. So 11.6 crores on the profit numbers. So that is a good number, and you can see that spike in the stock. Revenue too up about 30-odd%. We didn't have a poll for Westlife Development, but you know, this is a stock that is already up about 30-odd% in the last 1 year. So we'll just have to see what the same-store sales growth number looks like. EBITDA, again, that's a very good number. 34 crores looks quite good. 10% in terms of EBITDA margin is also very, very good. Remember, in terms of their profit, I think in the last 4 or 5 quarters, this is clearly the best number that they have posted. Post Q3 onwards, actually, they've been doing well. And we'll have to, only thing that I think the street would now really want to know is what this same-store sales growth look like. But these numbers, Prashant, are going down very, very well.
Yeah, although, I mean, you walk into a McDonald's and you wonder, I mean, and you see the rush and you see, well, they make 11 to 12 odd crores in profits. I mean, it seems a little, it seems small, but it's significant growth. I mean, actually, even if you compare quarter on quarter, you know, they made 6.6 crores in profits last quarter, that is Q4, and Q1 of 19 they made 11.6 or so. So this is I mean, beat by most yardsticks. What we are flashing is year on year, and there also there seems to be no problem. We'll flash the same store sales growth number in a bit. The stock's moved up 10% on the back of the numbers.
Also I suppose this great reaction to the stock is also because for the last many quarters now, their same-store sales growth has actually outpaced Jubilant. So this time around, given that Jubilant itself has beaten all the estimates in terms of same-store sales growth, I think perhaps the street is expecting that Westlife is going to absolutely knock it out of the park. Look at that, now 13% higher.
Forget same-store sales growth. There's burgers versus pizza somewhere. Just decide what will people choose over a very long period of time. It's as simple as that, right? Maybe throw in a donut or two as well. But yeah, 13% now. It's actually moving up as we speak. For almost 14 now. 395 or so is where Westlife is at this 395. So it's pretty solid going.
And look at the volumes. It's seeing 5 times the volumes that it sees on a 10-day average. So volumes also for this stock.
I think we will get an opportunity to speak with Mr. Jatia at Westlife, and it'd be interesting to speak with him on the back of the numbers. This is, by the way, also the quarter, I think, where they launched all these healthy initiatives, and they kind of sort of, they went pretty big in terms of advertising that out as well, saying, well, all our products and across the product range, we're going to consume less of oil and less of stuff which is unhealthy, and make the entire product offering a lot more healthier. So maybe that has worked, although that is also an expense. We don't know if that was that came in this quarter, maybe the last one. As I said, when we speak with Mr. Jatia, we can put those questions to him. Still waiting for the same-store sales growth number, but that is the sharpest reaction to a result we've seen, at least so far today. Anything else, Umera?
No, that's about it for now. So we'll wrap up then, I guess, on Midcap Radar. We'll be back in just a bit.